Hey, Joe Mastriano, CPA, over 40 years and thousands of successful IRS tax cases. This week, I had gotten emails from people who were levied when they thought they were in a payment plan. And this continues for decades. People are not being told from the IRS or their so called IRS representative what exactly constitutes a payment plan. So I'm going to go over it with you right now. What constitutes a payment plan is number one, they have to set it up properly. If you owe more than 1 year, all those years need to be in the payment plan. Number two, there's a code, a status code such as 63, 60, 53, or a statement such as this period is part of an installment agreement that must appear on the transcript for each period that's part of the agreement. If it doesn't, then the IRS system doesn't know that that period's part of an agreement and might levy you for it. Now, once they do that, that's the easy part. What you have to do is make sure you file and pay your taxes on time. And a lot of people mistakenly listen to like H&R Block and the news and all these people that don't understand when taxes are actually due. Taxes are due during the year through a W-2 or estimated tax payments. The last estimated tax payment for the year is due January 15th. So if it's past January 15th and you owe taxes, technically you broke your installment agreement. You can call Stephanie 713-774-4467, set up a consultation. I'll explain all of this in detail and how it specifically applies to you. So let me continue. Your returns must be filed on time. And if you have a business agreement, it could be tied into your personal as well. So if you're late on your personal taxes, it could break the business agreement. Sometimes I can get a personal levy off or not even filed if you're in compliance on the business agreement. There's a lot of things that can be done that people don't realize if they just listen to the IRS or read stuff in a guide. You always need somebody that has many years of experience specifically dealing with your IRS issues. So you must file on time, pay on time, and your monthly payments need to be logged into your transcripts. Excuse me. They must be logged into your transcripts by the due date. A lot of people will postmark it, but they don't know that. In fact, it's getting worse because I had postmarked my corporation extension by the due date. They totally ignored it and said it was late, and now I have to fight those penalties. Eventually, I'll win. They've done this twice before, actually. It's just a game that they play. So you should sign up with EFTPS.gov, Electronic Federal Tax Payment System.gov, and get your payments on that system before the deadline. So they'll show up on your transcripts before the deadline. And then they can't pull that with you. So again, what they do is they have to code each period that's part of the agreement properly on the transcript. You must file your taxes on time, pay your taxes on time, and make sure your monthly payments hit the transcript by the due date. And the last part is no new liabilities can come out under the ID number that's part of the transcript. So a lot of people get fooled into setting up payment plans, and within a few months, their tax returns need to be filed and they owe money. Bam, that agreement is about to be broken because no new liabilities can hit. Now, I have ways if you're in that situation to stop it that go beyond this video. So I'm going to sign off here. Again, call Stephanie, 713-774-4467, and learn how not to be a victim of these tax relief companies that are not even professionally licensed firms, which is all of them, unless they can tell you they're a CPA firm, they're a law firm, or the person that owns the company doing the work is an enrolled agent. Thank you.